Come to Flash News Point. New York AP stocks tumbled Friday on anxieties the U.S. economy could be breaking under the substantialness of over-the-top funding costs expected to whip extension. The S&P 500 sank 1.8% for its most significant continuous disasters of something like 1% since April. The Dow Jones current typical dropped 610 centers, or 1.5%, and the Nasdaq Composite fell 2.4% as a sale for stocks whipped beyond what many would consider possible all around the planet back to Cash Street. A report showing utilizing by U.S. organizations moved back last month by significantly more than monetary specialists expected sent fear through business areas, with the two stocks and security yields dropping distinctly. It followed a gathering of more powerless than expected covers the economy from a day sooner, including a breaking down for U.S. delivering development, which has been one of the areas hurt most by high rates. It was a few days earlier that U.S. stock records jumped to their most prominent day in months after National Bank CEO Jerome Powell offered the most clear hint right now that extension has moved back enough for cuts to rates to begin in September as of now. Stresses are rising. The Fed could have kept its essential credit cost at a two-decade high for quite a while. A rate cut would make it more clear for U.S. families and associations to get money and lift the economy, yet it could demand an extremely lengthy investment to a year for the full effects on channel through. The central bank is clutching defeat from the jaws of win, said Brian Jacobson, supervisor monetary expert at Expansion Overflow. The Chiefs' monetary power has moved back such a ton of that a rate cut in September will be essentially nothing and too far to consider turning back. They'll have to achieve a choice that could be more noteworthy than the regular cut of a fourth of a rate point to divert a slump. Vendors are as of now betting on a 70% probability that the Fed will reduce its essential credit expense by a piece of a rate point in September, according to data from CME Social Occasion. That is in spite of the way that Powell said Wednesday that such a significant diminishing is not something we're contemplating as of now. Clearly, the U.S. economy is at this point creating, and a slump is quite far from a sureness. The Fed has been clear about the tightrope it's walking around. It started climbing rates powerfully in WAC 2022. Being too strong would smother the economy, yet going too sensitive would give development more oxygen, while declining to ensure win on either the positions or the development fronts on Wednesday, before the preventing monetary reports hit. Powell said dealt with specialists have a lot of room to reply on the off chance that we some way or another figured out how to see deficiency in the gig market directly following climbing its essential rate so high.